welcome to my channel, The Media. I'm Andrew. In this channel, we're going to be looking at different disruptive companies in order to unlock exponential gains. Because exponential gains will allow us to achieve our financial freedom. And disruptive companies are companies that will adopt a new way of doing things that are usually more innovative, that are usually more efficient. So if this sounds like you, consider subscribing to the channel by hitting the subscribe button. Also, if you are new to investing, consider using my link to join Charles Schwab to trade penny stocks. Using my link, you can get free money. Also, I'm not sponsored by them at all. I'm just giving you information, and when you use my link, you're supporting my channel. Thank you very much. Without further ado, let's dig in. So today, we're going to be talking about some very basic stuff that all investors need to know for us to be good investors in general. And I think this applies to everything, not just HCMC. But today's video is going to be specifically focused on HCMC. We'll talk about outstanding shares. We talk about DTC shares. We talk about float shares. What is restricted, what is non-restricted, and what are authorized shares. I think that it's important to know all of this because it will affect our decision and how we select stocks, in addition to it being a disruptive company. So I think that, it's always very important for us investors to educate ourselves. Okay, so while doing this research for you, I actually found some very, very important information that I want to share with you, because where we get our information is also very important. And I've discovered that a lot of information on the internet are not as consistent as I would like for it to be. So let's just quickly talk about the basic stuff first. So what are outstanding shares? Outstanding shares are the actual shares issued or sold to investors from the outstanding number of authorized shares. I think two of the key things that we need to know when it comes to trading are float shares and outstanding shares. Why do I want to say that? Outstanding shares are the total number of shares. And the total number of shares will tell you the value of the company. For example, if a company has 2 million shares, 2 million outstanding shares, and right now the stock price is $3. So then you can see 2 million times 3, that's the value of the company, which we also call market cap. And within the outstanding shares, you have the restricted shares and the non-restricted shares. And the restricted, non-restricted shares together make up your outstanding shares. The float shares are the shares that are non-restricted. This means these are the shares that we trade every single day, which are non-restricted. Restricted shares are the shares that internal employees hold, or shares that internal people have that we normal people cannot touch. So you see, what's available to trade are non-restrictive shares or float shares. So float shares become super important for us to know for that reason, because float shares are shares that we as retail investors have control over, but not the restricted shares. Another concept that's really important is volume, okay? When it comes to float and volume, if you have a high volume on a low float, then you can expect more spikes. For example, if you have 2 million shares, if you have a float of 2 million shares, and on a particular day, let's say you have 20 million trades, that means that the 2 million shares that are floating shares rotated 20 times, which means that the price of it goes up because the same stock or the same share has changed hand 20 times. When it comes to looking at companies, we want to make sure that we understand what the outstanding shares are and what the float shares are. Super, super important. For HCMC, as I was researching these numbers, I actually came across situations where Yahoo and other places have been reporting numbers that are very, very different. That to me is very troubling. Remember, knowledge is power.